Trends, they reshape entire sectors. Today we're looking at PolyNovo, one of Australia's most intriguing medical technology innovators and a company that often flies under the radar despite being a genuine force in advanced wound care. If you've been watching surgical tech over the last decade, you'll know there's been a shift away from fragile biologic grafts and towards scalable synthetic solutions. PolyNovo is right at the center of that shift. Their NovoSorb platform, a fully synthetic, biodegradable matrix, has quietly become a favorite of burns units, trauma centers, limb salvage teams and reconstructive surgeons across the United States, Europe, and Australasia. Surgeons talk about this product with an intensity you rarely see outside of robotics or space technology. And when clinicians become loyal to a device, revenue tends to follow. Why should you watch this episode all the way through? Because PolyNovo is at one of those rare inflection points where clinical momentum, commercial expansion, and unmet medical need intersect. The United States market is accelerating, reimbursement is clearer than ever, and the company is preparing to push into new indications that could multiply the addressable market far beyond burns and trauma. If you're an investor who follows medtech before the mainstream catches on, this is one of those cases where understanding the technology deeply gives you a real advantage. And before we dive into the strengths and risks ahead for PolyNovo, a quick reminder that the TechEyeSpy book series published by Rhubarb Bridge Publishing and available on Amazon and all good bookstores continues to expand sector by sector, giving you deeper background on the industries we cover in these videos. Each book builds out the context behind the companies we analyze, with full-length research and narrative case studies. With that said, let's get into the strengths, because PolyNovo has some powerful ones and some that aren't obvious until you dig into the clinical data. Strengths. One of PolyNovo's greatest strengths is that it doesn't rely on the mystique of biotechnology or the complexity of engineered tissues. Instead, it succeeds by being beautifully engineered simplicity. NovoSorb BTM is a fully synthetic scaffold, and that single design choice gives PolyNovo an edge that competitors can't easily replicate. Where biologic matrices can degrade unpredictably or collapse under infection, NovoSorb remains stable. It tolerates bacterial load in a way that surprises first-time users, and that consistency has created the kind of surgeon loyalty that money can't buy. In medicine, reliability is a moat, and PolyNovo has it. The company also benefits from remarkable timing within the US surgical market, where hospitals are under pressure to cut costs without compromising outcomes. NovoSorb is cheaper to produce, easier to store, and simpler to standardize than biologic grafts. Because it avoids animal-derived components, it carries no risk of disease transmission and requires no complex cold chain logistics. For procurement teams, that's not just a clinical decision, it's a line-item victory. It means fewer stockouts, fewer recalls, and fewer training hurdles. In an era where supply chains can collapse overnight, a synthetic, shelf-stable solution becomes far more attractive than its biological rivals. Another major strength is PolyNovo's expansion in the United States, which has become the company's financial engine. The sales force has grown year after year, and with each expansion comes deeper penetration into trauma centers, burns units, and plastic reconstruction teams. Once surgeons adopt BTM, they tend to use it repeatedly, not because of marketing, but because their patient outcomes keep reinforcing the decision. That organic, clinician-driven adoption is one of the most powerful forms of scaling in medtech. It means PolyNovo's growth isn't built solely on advertising spend, but on the lived experiences of surgeons who then evangelize the product to colleagues. Clinically, PolyNovo enjoys a broad and expanding set of indications. Burns are the headline use case, but limb salvage, necrotizing fasciitis recovery, complex trauma, and even reconstructive oncology have shown applicability. Every new indication expands the total addressable market without requiring the company to reinvent its core product. That is the hallmark of a robust platform technology, one scaffold, many clinical frontiers. This gives PolyNovo optionality, allowing it to grow laterally across surgical disciplines rather than vertically within a narrow specialty. Another strength is manufacturing control and scalability. Synthetic polymers can be produced with astonishing precision, and PolyNovo owns its production capability. That means predictable batch quality, high purity, and the ability to scale output without the biological variability that plagues competitors relying on animal or cadaveric materials. This operational clarity is a strategic advantage when entering global markets with strict regulatory frameworks. Consistency accelerates approvals. Finally, PolyNovo benefits from the M&A and investor interest surrounding wound care and regenerative medicine. Large medtech firms have repeatedly acquired wound care innovators because these products integrate smoothly into existing surgical portfolios. PolyNovo sits in that same category, a scalable, clinically proven device with international traction. Even without acquisition, the broader sector momentum lifts the company's profile and supports long-term valuation narratives. PolyNovo's strengths are not abstract ideas. They are tangible, measurable, and clinically validated. And that's exactly why the next chapter matters. Because no company, no matter how promising, avoids its pitfalls. Weaknesses? For all its clinical success, PolyNovo still carries the structural weakness that shadows many young medtech companies' over-reliance on a single flagship product. NovoSorb BTM is excellent, but it's also the company's identity, its revenue engine, and its cultural center of gravity. When a business becomes defined by one device, it inherits concentration risk, a regulatory change, a supply chain disruption, a pricing shift in US reimbursement, or simply aggressive competitor behavior could impact the entire company in a way that diversified players can absorb but PolyNovo cannot. Until the wider NovoSorb portfolio reaches commercial maturity, this vulnerability remains. Another weakness is the long, demanding education curve for surgeons. NovoSorb isn't a bandage, it's a staged reconstruction pathway requiring timing, patience, and specific surgical sequencing. When a product depends on technique rather than simple placement, adoption slows. Some surgeons struggle with the concept of delayed grafting or worry about managing the outer seal. Others compare it unfairly to biologics that behave differently. PolyNovo has to win this battle one operating theatre at a time, and that means training costs, support costs, and a longer runway to smooth penetration across hospitals. The company also contends with limited global sales infrastructure compared to major competitors. Integra Life Sciences, Smith & Nephew, and 3M's wound care arm all have enormous distribution networks and established relationships across departments. PolyNovo has been building its US sales force, but building is not the same as commanding the field. A smaller footprint means slower access to new hospitals, slower follow-up, and higher sensitivity to staff turnover. In medtech, momentum lives and dies with the sales rep, and PolyNovo simply cannot match the manpower of its rivals yet. Pricing power is another subtle weakness. Because NovoSorb is synthetic and relatively inexpensive to manufacture, hospitals expect value pricing. That's attractive for adoption, but creates a ceiling on margin expansion. Biologic products sometimes justify premium pricing because of sourcing challenges, rarity, or complexity. Synthetic matrices do not carry that aura. PolyNovo's path to stronger margins must come from scale, not premium position, which is a harder, slower climb. A further limitation is regulatory complexity as the company expands into new indications. Every fresh application hernia, orthopedics, breast reconstruction, oncology brings a new layer of trial design, ethics approval, multi-center studies, and real-world data requirements. The medical world moves slowly, and investors sometimes forget that. A synthetic polymer might feel simple compared to a biologic graft, but regulators don't care about simplicity. They care about data, and data takes time. Finally, PolyNovo faces the perception problem of being an Australian-listed medtech in a US-dominated market. US surgeons may love the product, but US investors often prefer US-based companies with US reporting standards, US capital structures, and easier analyst coverage. That disconnect can suppress valuation and leave PolyNovo relatively underfollowed despite strong clinical relevance. Being overlooked is not fatal, but it does slow the recognition curve. PolyNovo's weaknesses aren't existential threats. They're real-world constraints that shape how fast the company can scale. And sometimes these constraints set the stage for the most dramatic possibilities. Opportunities. The most immediate opportunity for PolyNovo is the continuing expansion of the US market, which remains the world's most lucrative arena for advanced wound care. Hospitals are still discovering NovoSorb, and every time a new burns unit, limb salvage team, or trauma service adopts the matrix, utilization tends to escalate rapidly within that institution. The US is full of these pockets of high-value adoption waiting to be unlocked, and PolyNovo's growing sales team is still far from saturation. Hundreds of hospitals remain untouched territory. For a device with strong clinical outcomes and favorable reimbursement, this is prime ground. Another major opportunity lies in new surgical indications, which is where the long-term valuation narrative gets interesting. Burns are the company's foundation, but BTM is already being used in chronic wounds, reconstructive oncology, necrotizing fasciitis recovery, fasciocutaneous deficits, and complex limb reconstruction. The real leap comes from the adjacent markets beyond soft tissue: hernia repair, breast reconstruction, orthopedics, and even abdominal wall reinforcement. These are multi-billion-dollar global markets, and most currently rely on biologics or mesh products that come with significant drawbacks: cost, rejection, stiffness, infection sensitivity. A synthetic matrix that integrates, remodels, and dissolves could fundamentally shift clinical behavior in these fields. If even one of these indications crosses a regulatory threshold, PolyNovo's addressable market multiplies. There is also a powerful opportunity in global expansion beyond the US, particularly in Europe, the UK, and high-population emerging markets, such as India. Burn injuries remain far more common in developing healthcare systems, and biologic grafts are often inaccessible due to cost and logistics. A shelf-stable synthetic device that requires no cold chain and tolerates infection could be transformative for surgeons who have never had access to these advanced options. Unlike many medtech companies, PolyNovo's product is inherently suited for environments where logistics are unpredictable, and that creates a strategic advantage in regions where competitors simply cannot operate. The NovoSorb polymer platform itself presents another deep opportunity. It is versatile. BTM is only the first major expression of the technology. PolyNovo can re-engineer porosity, thickness, degradation rates, and structural behavior to suit different tissues. This modularity means the company isn't scaling a single product. It's scaling a materials science platform. When a company controls the polymer science, the IP, the manufacturing, and the clinical pathway, it has the potential to generate an entire family of products that share a common brand identity and surgeon trust. This becomes a portfolio, not a product line. Strategically, PolyNovo is also positioned within an active acquisition corridor. Wound care and regenerative medicine have been M&A hotspots for years. Larger medtech players frequently buy companies with strong clinical differentiation and simple, scalable manufacturing. NovoSorb fits the profile perfectly. Synthetic, stable, well-adopted, and clinically proven. Whether PolyNovo remains independent or is eventually absorbed by a major player, the environment is favorable for upward valuation pressure. Finally, one of the subtler opportunities, often overlooked, is data. As thousands of cases accumulate, PolyNovo is building one of the largest real-world datasets in synthetic reconstruction. That data shapes surgeon confidence, strengthens reimbursement arguments, and drives guideline inclusion. In medical technology, data becomes momentum, and PolyNovo's dataset is only getting stronger. All of these opportunities point in one direction. PolyNovo is not simply riding a trend, it is in a position to create the next standard of care. But that momentum doesn't come without its threats, and those threats matter, especially when operating in a competitive and highly regulated field. Threats. The most significant threat facing PolyNovo is competition from entrenched players with deeper pockets, broader sales forces, and established surgeon networks. Companies like Integra, Life Sciences, Smith & Nephew, and 3M do not take market share losses lightly. If NovoSorb continues to gain traction, these giants can respond with price incentives, bundled product strategies, or aggressive sales rep deployment. In medtech, the companies that already own operating theater real estate are the ones best positioned to defend it. PolyNovo may have a better product, but better products do not always win when distribution muscle enters the equation. Another formidable threat lies in regulatory drag. PolyNovo's greatest upside comes from expanding into new indications, but those same pathways expose the company to long delays, shifting FDA interpretations, and clinical trial risk. A single trial that fails to meet its endpoints or experiences recruitment problems could slow momentum by years. Investors often underestimate how fragile timelines are in medtech, especially when trying to break into categories like hernia repair or orthopedics, where complications and surgeon variability make trial design difficult. A slowdown in the pipeline would leave PolyNovo overly dependent on BTM. The company is also exposed to reimbursement risk, particularly in the United States, where coding changes, coverage revisions, or shifts in hospital purchasing behavior can reshape an entire product category overnight. BTM currently benefits from favorable reimbursement, but health system administrators are under immense pressure to cut costs. If competing products are bundled more cheaply, or if Medicare adjusts coding classifications, PolyNovo could be forced into margin compression to remain competitive. The product might still be clinically superior, but hospitals buy on budgets, not on sentiment. Supply chain reliability is another point of vulnerability. While NovoSorb is synthetic and scalable, the company still depends on consistent polymer production, cleanroom capacity, and regulatory-grade manufacturing environments. Any disruption, whether from equipment failure batch inconsistency, or workforce shortages could interrupt supply at the very moment demand is increasing. Larger competitors can absorb shocks through multiple facilities. PolyNovo cannot. A single point of failure in a company with a high-demand product becomes an operational threat. There's also the clinical perception threat. BTM requires a staged approach to reconstruction, and if a hospital team has a poor experience due to technique, timing, or misinterpretation of wound readiness, negative sentiment can spread quickly. Surgeon bias, once formed, is extremely difficult to reverse. A few poorly managed cases, even if not caused by the product, can skew broader adoption. MedTech reputation is fragile, and competitors are always ready to amplify doubts. Finally, PolyNovo faces valuation risk simply because it remains an Australian-listed company competing in a US-dominated sector. Many global investors expect US reporting standards, NASDAQ visibility, and American analyst coverage. If PolyNovo's international profile doesn't rise at the pace of its clinical adoption, the share price can lag far behind the underlying business performance. Being under-recognized in the capital markets becomes a threat in itself. These threats don't dismantle the case for PolyNovo, but they define the tightrope the company must walk. Momentum in medtech is powerful, but it can reverse quickly when competition, regulation, or perception shifts even slightly. Conclusion: PolyNovo sits in a rare position for a mid-cap medical technology company. It already has a product that surgeons trust, outcomes that speak for themselves, and a materials science platform with room to expand far beyond its original mandate. Most medtech firms spend years searching for a clinical foothold. PolyNovo has one, and it is deepening with every new hospital, every new trauma case, and every surgeon who integrates NovoSorb into their reconstruction pathway. Yet the company is still early in its story. Its strengths are undeniable, its opportunities substantial, but its vulnerabilities are real. PolyNovo is scaling in a world dominated by competitors with far more resources, and it must continue navigating regulatory hurdles, reimbursement pressure, and global distribution challenges. This is a company with tremendous upside, but also a company that must execute with precision to convert clinical enthusiasm into enduring commercial dominance. What makes PolyNovo worth watching is the trajectory. The shift toward reliable synthetic wound care solutions is no longer theoretical. It is happening across the US, Europe, and Australasia right now. NovoSorb has already proven its clinical value. The next chapter is about scale, diversification, and strategic positioning in a rapidly evolving sector. For investors, PolyNovo represents the kind of story that rewards early understanding. A platform technology with room to broaden, a growing international footprint, and a product that solves real problems for clinicians operating at the sharpest edge of medicine. If you're following the future of regenerative medicine, PolyNovo deserves your attention. And as always, for deeper sector insights, you can explore the TechEyeSpy book series from Rhubarb Bridge Publishing, available on Amazon and in all good bookshops where we expand on the full landscape behind the companies we cover.